Hi you guys, what it do? It's your boy X back with another video, and today we're going to talk about my dividend portfolio. We're definitely going to give you guys an update. It's been a lot of changes, a lot of things that happen. I'm just going to go over these things with you guys so you can see what's happening and you can continue to see the growth. Let's get to it. Alright guys, what it do? It's your boy X here, and today we're going over my dividend portfolio. So most definitely don't forget to hit that subscribe button, like this video, and share it because I want to show as many people as possible how to make passive income. I want to help you guys. It's not as hard as you think. It's pretty much hard work, determination, and persistence. Just starting it and keep it going until you reach that point in your life where you think, okay, this is where I want to be. But nevertheless, subscribe, hit the like button, and let's just hop right into it. All right guys, so as you can see, my portfolio is sitting around 9K. I've been steadily growing this portfolio since I want to say September, if I'm not mistaken. I think it was around September I fully dived in. But like I said, for dividend portfolios, anybody can start one. We have a numerous of brokerages out here, Fidelity, Robinhood, M1 Finance, Charles Schwab. You can pick any one of these. They're amazing platforms, but to get started does not cost you guap, does not cost you defetti, does not cost you you don't need a money printer. You can start investing with as little as $20, $50, $100, whatever tickles your fancy. It's up to you, but the goal is to start. For me personally, I invest $500 a week, roughly every Monday, and I've just been doing that consistently to now. I am at this point where I'm sitting at 9K. Right. So if you look over here and look at my portfolio, I'm sitting at 9K. Of course, I am down 1.6 today percent due to the market is going down. Now, the reason why this is a good thing is because although when it's a bad day and it's red and it's going down, of course you are losing money. But it's like a coin. It's always two sides to that. Yes, your balance total is going down. You still have the same amount of shares and everything. It's just the price of said shares are dropping due to fluctuations in the market. Numerous reasons. People selling off. A lot of reasons. But if you're a dividend investor, which I really hope you are, all that's irrelevant to you because you're holding long term. Hold long term. Trust me, guys. Now, since you're holding long term, the money you make from your dividend does not change if your overall portfolio drops. Now, with that being said, hold. Alright, but pretty much as things drop, your portfolio drop. But the best thing about that is it gives you a chance to buy more at lower prices. Now, if the market never went down and continued to go up, say you bought shares 3 months ago at, let's just say $30. Couple months that went by, now you want to buy some more said shares. If the market always continued to go up, then them shares wouldn't be $30 anymore. Now them shares would be $35, $40. Who knows? The best thing about the stock market is some days it goes up, some days it goes down. And the days it go down, that is your chance to buy the dip. That is what that means. When the market starts to go down, because normally it does, and it go right back up, and it just does what it do. But normally when that market drops and it turns red, these are the days that you most likely want to buy. Now, I'm not saying time the market only buy when it's red, but I'm saying is the days you normally tribute into your portfolio. If it's red, do not say, well, I'm not going to tribute just because it's red. Always keep a constant contribution into your portfolio at whatever date you best. I do it on Mondays like me. You can choose Tuesdays if you like Tuesday, because I know things turn up on a Tuesday. But like I said, pick your date, whatever suits you, whatever day tickles your fancy, and go with it. But on days where it's red, you can't buy the dip. And by buying the dip, what they do is if you buy a stock at 35 and then say it dropped down to 34, 33, and you buy that will lower your cost per share, which will overall help your portfolio once it starts to go back up. Because the lower your price average for each individual share, the better it is when you start to show up. Those percentages really matter. So like I said, buy the dip if you can, but always consecutively invest. Now, for me, I have 10 holdings, as you guys can see. We have Apple, ARK-F, Chevron, EPD, MO, OKE, OMC, TD, and WBA. Now, I have cut a lot of shares out of my portfolio because I want to specifically key in on these 10. And I have one more that I will be adding next Monday, which will be my Johnson & Johnson. Now, when you're starting off, it's best to know, keep a certain amount. Now, I'm not saying just keep adding in new stocks every time you do it. It's good to do that early on, but keep it at a decent amount. So that way you can get a decent volume of stocks for said company that you choose to invest in. Me, I'm going to keep about 11, at least I get to about 30, 40K invested. And then I'm going to start adding in more stocks. But for right now, it's just these 10, and the 11 one will be Johnson & Johnson. But as you guys can see, I have 8 shares of Apple, 23 of ARK-F, 18 of Chevron, 50 of EPD, 27.8 of MO, 50 of OKE, 11 of OMC, 14 of T, 22.3 of TD, and 28.8 of WBA. And as you can see right here, you will see my cost per share, 34, 45, 28. And you will see that as of today, I was up on WBA, TD, T, OMC. I was down on OKE, MO, EPD. I was up on Chevron. I was down on ARK-F, and I was down on Apple. Now, just because it's down, like I said, go back to what I said earlier, it does not change anything. I'm actually hoping Apple doesn't shoot up before I can dump in a decent amount and get a lot more shares of Apple, because I really believe in said company. Really, I believe in all these companies because that's the reason I invest in them. But this is my dividend portfolio. As you guys can see, I'm most definitely trying my best to diversify. As you can see, I'm very heavy on energy, like a lot. I'm gonna have to diversify out of that, and the rest of them are pretty much around the same, 11%, 12%, and then consumer staples is 24%. But I'm working on it. And the part that you guys really want to see would be the income far as my dividends. Yes. All right, guys. So as you can see right now, my projected annual income is sitting around $637. That means from all the stocks I have and all the shares, over the course of a year, if I bought no more, it would make me $637. And as you can see, it breaks it down by the months. October 44, November 77, December 36, and continuation. Now that's if I bought no more shares. Of course, I inject more every Monday. So as of right now, this is what I am projected with based off all my shares and how much they pay out in dividends. And as I add, that number will steadily grow and grow and grow and grow. Now, you can see over here to my left hand side here, this the dividend news. Pretty much it just give me a layout of when these dividend dates are, when the EX dates are, and when they're going to pay out and things of that nature. As you see, within the next 30 days here, I have 4 dividend payments coming in, $46.75, $22.25, and $20.65. And as you can see, it gives you the ticker symbol for each one under it. The $20.65 is T and TD, and the $22.25 is EPD, and of course the $46.75 is OKE. So, like I said, it is a way for you to make passive money. It is most definitely a way I strongly recommend, due to the fact that you can just see your growth happen in your face, before your eyes, and it lets you own things. I know it may seem fragile to some, but technically I own a share or a portion of these said companies. And unless I myself choose to sell, they're mine. And ownership is the way to go. I know a lot of people have many side hustles and ways to make money, but long-term dividend investing is the way to go. I'm not saying it's the only way. I'm just saying it's one of the better ways to go. Buy and hold long-term, and this is what I'm doing. But I do it in dividend stocks. Like I said, not all stocks pay out a dividend, but a lot of them do. And with that being said, these are the ones I look into to see which one I think are my type of style, and I invest in them. And like I said, I started in September, and I did not start off investing $500 a week. I started off with, I want to say $50 or $100, and then I probably bumped it up to probably an extra $50 or $100 out of each one of my checks, and I get paid bi-weekly, so you know. And as I started to buy in, it truthfully gets addictive. You just want to see that number rise and just know, hey, I'm making money, and all I did was just buy and hold. That's it. It's nice, a nice feeling. But that is my dividend portfolio. Most definitely going to keep you guys updated with that. But my name is Exia. This is my YouTube channel, Mo Thank. Wow, okay. Most definitely thank you guys for tuning in to my channel, watching my videos. Hope to see you guys in the next one. Don't forget to hit that like button and most definitely subscribe. But it's your boy Exia, and I'm out.